Ladies and gentlemen, good day and welcome to SJS Enterprises Q2 FY23 results call hosted by Axis Capital Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Devanshi Dhruva. Thank you, and over to you, ma'am.
Thank you, Aman. Good afternoon, ladies and gentlemen, and thanks for being with us over the call today. We appreciate it and wishing you all a very happy Diwali and a prosperous New Year from SJS team. Moving on, this is how we intend to take today's conference call forward. I will pass on the dials to Mr. Sanjay Thapar, our CEO and Executive Director, who will take you through some of the slides of our presentation that has been uploaded on the stock exchange and website as well. Sanjay will take you all through the industry view, our business performance, and the strategic outlook for the future growth of the company. And Mr. Mahendra Naredi, our CFO, will update you all on our financial highlights, post which we will open it up for Q&A. The duration of this call is around 60 minutes, and we will try to wrap up our comments in about 20 minutes. So we leave enough time for you guys to ask questions. If the time is not enough, please feel free to reach out to us through email or write to us, and I will try and answer all your questions to the best of my ability. Thank you again, and I will now hand it over to Sanjay to make his opening comments. Over to you, Sanjay.
Thank you for the introduction, Devanshi. Hello and good afternoon, everyone. As you all know by now, SJS is India's leading and globally recognized decorative aesthetic player with an end-to-end design-to-delivery capability. Today, I am happy to share our Q2 FY23 results. SJS continues to deliver a strong operating financial performance despite uncertainty in the global markets due to the ongoing Russia-Ukraine war and other macroeconomic headwinds, spiraling energy costs and high inflation resulting in subdued demand in European and North American markets. We continue to maintain a strong outlook at SJS for the near and medium term. I will refer to the presentation uploaded on our website and also on the stock exchanges for this presentation. So please, you could refer to this. So SJS is a fast-growing design and aesthetic solution company. Our unique business model and diversification strategy has enabled us to consistently outperform the underlying industries, and this quarter has been no different. We yet again continue to outperform the automotive industry both on a YOY and a QOQ basis. Premiumization theme continues to gather momentum as we are witnessing its acceleration every year. We continue to remain buoyant on the structural premiumization theme both within the automotive and consumer durable industry over the medium and the long term. So I refer to slide 7 and 8 of our presentation. For the quarter ending September 22, the two-wheeler production volume grew 7.7% YOY, while SJS two-wheeler sales shot up by 31.3% for the same period. This superior growth in two-wheeler segment compared to the industry volumes was account of our new business wins, market share gains as we increase our share of wallet with key customers. Passenger vehicle industry volumes grew 38.1% YOY, while SJS passenger vehicle sales also saw a healthy growth of 28.9% YOY. We have grown well within our set of PV customers. Our PV journey is still in early stages, and we have won new businesses that will come into production in the next few quarters. The trajectory for growth in the PV markets looks very promising with the introduction of new generation technologies that are under development at SJS. Overall, the automotive segment, that is two-wheeler and passenger vehicles combined, production grew by 12.1% YOY, while the SJS automotive segment grew by 30.3% YOY, surpassing the combined industry growth. SJS total consolidated sales grew 17.3% year-on-year, despite slowdown in the consumer durable market and the impact on exports due to various geopolitical challenges and the macroeconomic headwinds we see in Europe and North America. For H1 FY23, SJS outperformed the market by growing at 38.9% year-on-year in the automotive segment, whereas the two-wheeler plus four-wheeler combined industry production grew by 22.5% on back of strong recovery in the two-wheeler segment. SJS has delivered a strong YOY growth of 26.5% for H1 and maintained guidance of delivering around 25% year-on-year growth for the current year. On a sequential basis, SJS consolidated auto sales grew 19.3%, surpassing the two-wheeler and the passenger vehicles combined production of 16.4% growth YOY. Overall, our domestic sales have grown 22.9% year-on-year and 12.5% quarter-on-quarter, compensating for lower demand in Europe and North America. Excluding these two regions, our exports revenue grew by 5.7% year-on-year. Despite impact on exports and consumer durable segment, I commend the SJS team for maintaining the company's sales momentum in Q2 FY23. Our strategy of diversification by industry segments and regions has helped us minimize this impact. I would now like to hand over the call to Mahinder, who is our CFO, to update you on the SJS financial performance before I come back to you with our business outlook for the year. Over to you, Mahinder.
Thank you, Sanjay. Good day, everyone. Wishing you everyone a happy Deepavali and a prosperous New Year. Hope you had good celebration. Now, moving to slide number 10, it talks about our financial performance in detail. I would like to highlight that the company is picking up a strong pace and delivered a robust Q2 financial year 23 financial performance despite external challenges. Our consolidated revenue grew by 17.3% on a YOY basis to rupees 1,169.4 million. EBITDA grew 24.5% on a YOY basis to rupees 333.8 million on a EBITDA margin of 28%. This indicates an improvement of a 134 bps in margin, and I would say primarily on account of the higher sale, a strong focus on the operational efficiency and a bit added by the softening in the raw material prices. PAT grew by 30.7% on a YOY basis to rupees 199.5 million, delivering a strong margin of 17.1% and 175 bps margin expansion. We continue to witness operating leverage in the business. Now, sequentially also, our sales grew by 13.3% and Q2 financial year 23 margin remained robust with EBITDA margin improving by 161 bps and PAT margin expanding by 135 bps on back of, again, higher sales and operational efficiencies. I am happy to share that all our efforts and initiatives taken post Exotech acquisitions are adding growth and momentum to the consolidated business. Now moving to the slide 11, on H1 basis, we are consistently delivering a robust performance and inching closer to achieving our target quarter after quarter. The company clocked 26.5% YOY growth in revenue, boosted by 35% YOY growth in domestic sales. EBITDA grew by 34.8% on a YOY basis to rupees 612 million with a margin of 27.2% and margin improvement of 142 bps. PAT grew by 46% YOY to rupees 361.6 million on a margin of 16.4% and margin expanded by 219 bps. Now moving to slide 12 and 13. As on 30th September 22, SJS has built a comfortable consolidated cash and cash equivalent of around rupees 1,295.1 million, and we are a debt-free company on a net debt basis. The company generates strong free cash flow, and for H1 we have added rupees 322.6 million. Our free cash flow to the EBITDA for H1 financial year 23 stand at a healthy rate of 52.7%. If I talk about as on 30th September 22, we have achieved robust, I would say highest one, ROC and ROE 34.8% and 16.7% respectively. I would now like to hand over back to Sanjay to continue about our business update and outlook for the year. Over to you, Sanjay.
Thank you, Mahendra. I now refer to slide 14 and 15. So we are excited to share some of our key business highlights with you for this quarter that will help us achieve our medium-term goals. For this quarter, we added leading customers like Skoda Auto, Volkswagen for chrome plating parts in the PV segment, and Atomberg Technologies for IML parts for consumer appliances segment. SJS also entered a new FMCG premium segment by adding John Distilleries as a customer for specialty decals. With the addition of Buy My EV and TI India in Q2, SJS now supplies to 12 leading EV manufacturers in the country, and we are continuously adding more customers. Building mega accounts is a key focus area at SJS. We continue to expand our share of wallet with key customers by offering new products and winning new businesses. This quarter, we won many new businesses with our customers like TVS, Bajaj Auto, Royal Enfield, Mahindra, etc. On the new product front, we see a huge opportunity for premiumization. We see increasing demand for display screens, both in the two-wheeler and passenger vehicle segments. We are already working with OEMs for these futuristic products, such as illuminated logos, cover glass technology for the automotive center stack displays. We are grateful to our customers for recognizing our efforts of consistently delivering products of the highest quality standards. This quarter, SJS won 8 quality awards. Visteon, their global director, presented us an award for quality and delivery performance. SJS won 6 awards for Quality Circle and Kaizen at the Quality Circle Forum of India. Lumax also awarded us for a contribution towards the quality of our products supplied to them. At SJS, we believe in inclusive growth, not only for our employees and stakeholders, but also for the community around us. We adopted in this quarter 7 villages under the Agara Panchayat jurisdiction, Bangalore, as a part of the Swachh Bharat Abhiyan, helping us improve health and hygiene conditions in these villages, leading to a better living environment for all the village inmates and to minimize the risk of health hazards. In the end, I would like to mention that SJS continues to deliver on its promise of strong operational and financial performance quarter on quarter. We maintain our FY23 outlook of around 25% revenue growth, as well as our medium-term guidance from FY23 to 25. Premiumization, addition of new customers, new order wins, recovery in consumer durable sector and the export markets, aided by tailwinds of a positive outlook for the automotive industry, will enable SJS to outperform the industry in terms of growth. Our medium-term plan of capacity expansion at Exotech to meet higher customer demand pipeline, focus on new technology product development to meet futuristic demands of the premium products by our customers, and nurturing the customer relationships that we have to build more mega accounts. These will propel our sales in the right direction. High sales growth, strong margin profile, and the expected operating leverage will drive our PAT growth of close to 30% year on year in the years FY23 and moving beyond. So thank you. With this, I come to an end of the company presentation. So we will open the floor for any questions that people would have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. First question is on the line of Akshat Mehta from Samiksha Capital. Please go ahead.
Audio?
Yes, Akshat. You may go ahead.
Yeah, so I have a couple of questions. One is on the export front that has been affected this year. So what kind of a demand scenario are you looking after the quarter 2? So what is the reason for affecting in quarter 2, and what kind of scenario are you looking at currently in October and for quarter 3 and quarter 4?
Yeah, thank you for your question. So, as you are aware, the industry, the demand in Europe, North America is seeing great macroeconomic headwinds in terms of energy costs and higher rates of inflation. So at the moment, we still expect this market to be soft, and towards the end of this quarter or early next quarter, we could possibly hope for some recovery when the market settles down. So at the moment, increased domestic demand has compensated for these softening in the export markets, but we are cautiously optimistic that exports will come back because the size of the markets in these North America and Europe are very large, and customers also are challenged with these supply side constraints that they are facing, and India is a destination, and SJS being a strategic supplier would stand to gain from this.
Okay. So but you still, the outlook is that, exports, how are the exports looking right now in quarter 3, let's say in October? What is the on-ground scenario that we're looking at? Are the exports coming back from, players like Whirlpool and others? Or
They are improving. So we have so there are two different aspects to this. So Russia as a market still continues to remain impacted, which is some portion of our exports. But other area demand in other areas is likely to see an upward trend. That is the outlook that we have from our customers at the moment. But of course, we need to wait and watch and see how actual demands pan out.
Okay. So but your 3-year goal of reaching 25% export as a percentage of overall sales, that is still being guided, right?
So these are near-term challenges that we see. The long-term outlook for exports remains extremely bullish for the simple reason that the market size, as I said, is very large, and we are also on the enlisted panel as a global strategic supplier to these customers. So we see that demand intact, and our expectation for growth remains unchanged.
Okay. My second question is on the likely acquisition that you were talking about earlier in Europe or North America. What is that and rationale that you have for setting up a new facility or acquiring a new facility over there?
Yeah. So America at the moment, or even Europe, offers good valuation opportunities. So these regions face slowdown, and there are many opportunities cropping up at attractive valuations. However, we are careful where we tread, so we are cautious to find the right fit for us. And of course, our management committee will evaluate the proposals as to what adds to our business plan and strategy that we have moving forward. So since there are current opportunities, multiple opportunities are available, we are in the process of evaluating all the avenues available to us.
And what is the kind of the next step or the strategy once you acquire?
So there are two themes here. So as we have said earlier, the product we produce are labor intensive. They require, there's a lot of variety that is required. So we have tested ourselves with global peers, and we find that we are very comparatively positioned, and there is an opportunity to use the manufacturing capability that we have at India to supplement whatever acquisition we will do. So we see a great opportunity for margin expansion moving forward, given our good infrastructure that we put in place in India.
Also, Akshat, regarding the acquisitions also, you need to note that this acquisition is going to be whatever inorganic expansion we will do, that will add on to the 25% growth that we've already guided for. So we are looking at various opportunities and proposals, but yes, we need to find the right fit, just like how we have been successful and we are very happy with the integration of Exotech. Similarly, we would like to find a good fit for us so that it will help us to grow further.
So, ma'am, but like acquisition of Exotech was not margin accretive in terms of your EBITDA margin. So how are you seeing margin expansion when you acquire a new entity in US or Europe? I mean, because I think your India facility will be generating the highest margins overall.
So let me take that question. So basically what we are saying is that the products that we produce have a lot of a large variety. So there are many SKUs, and at SJS over the years we have fine-tuned the art of production them and producing them at minimal cost. So cost-wise, when I quote for my global customers, I am already giving I am 5 to 7% cheaper than the existing buying prices that they have. So the strategy really is that if I acquire a business there, I could be able to add value to their offerings by bringing in or using a blend of manufacturing both in India and the overseas markets to retain the same selling price, but my manufacturing cost would be lower. So that in result would expand the margin available to me for that product. So typically whatever margins I earn today or I quote today, I have to give a discount, but once I have a company that I acquire there, I would be able to sell at that local prices, but my cost of manufacturing would be more efficient compared to the incumbent supplier. So that is the...
So the manufacturing will be done in India itself, but the marketing will be done by the US or Europe entity.
Not all manufacturing will be done in India, but for example, development would be done in India, product engineering could be done in India, the sales teams and the market-facing interaction will be done by the team that we have at the acquired company, so that we have a larger global footprint and are much more closer to the customer, so more opportunities come our way.
Okay. And the next question is that can you give the breakup of what is the percentage of new age products in the sales that you've seen this quarter or H1?
So new age products, definitely we are seeing more traction building up on the same in terms of passenger vehicles and two-wheelers. And these products are right now currently, because they are new generation products, they are in lower volume and the revenue is kind of flattening. But we do expect that because we are seeing so many RFQs coming in, we are expecting that this is going to grow further for us as the new generation technology products in itself are seeing a lot of excitement and interest from different customers of ours. And because of that, we feel that this is going to grow at a faster pace. Especially the new products that we are working on currently is, the cover glass technology and related logos that we recently launched. So we are seeing a lot of engagement and dialogues with our customers, and we are building prototypes for it. At the same time, there are a lot of cover glass technology, especially is seeing a lot of interest among the PV segment. And once the volume increases, definitely that demand for localization is also going to increase. So that is giving us the confidence that we are going to grow further in this new generation product.
Devanshi, let me just elaborate on that question. So new technology is a key focus for us to develop futuristic products. So if you refer to our presentation on page 20, 21 and 22, we have highlighted what are the new age products that we are gearing up for. So for example, on the slide that you see for motorcycles, so we have clearly mentioned there that what are the legacy products, what are the new generation products that you just talked of, and what are the futuristic products that we are working on. So the futuristic products are in-molded electronics, illuminated logos, and touch panels. So there is a trend amongst OEMs to move towards better features in terms of display. And at SJS, the printing capabilities that we have lends ourselves to do a lot of specialty coatings that are required on these materials. So already we are working on these futuristic products and in dialogue with customers to localize it in India. So that is a good fee moving forward. Similar example you see on slide 21 for car exteriors. So the futuristic products that we are talking about really is the center stack display screens that we have. That is slide 22. So the center stack display that you have, the touch screen that you see on that slide. So we are in discussions with key customers who already supply to the large famous brands that you see in XUV 700, the Tata Nexon, all new generation vehicles are having larger and larger displays. SJS has strong relationship with customers, and already we are in dialogue with many of our customers of offering them this touch screen and cover glass technology. Similarly, there is a lot of demand for ambient lighting. So thanks to this initiative that we've taken on in-molded electronics and smart services, we will see an explosion of this demand moving forward. So these are the futuristic technologies that, apart from whatever Devanshi said, the share of the new gen products, these are game changers which could propel growth very, very aggressively for the domestic market, for the both the appliance and the consumer market. Slide 23 gives you what are the future requirements or futuristic requirements of our customers in the appliance sector. So here the imported electronics initiative that we've taken will help us. There are displays coming, including touch screens in these consumer appliances, and we will just be able to offer them because customers come to us as a technology provider. So when we have this early involvement with customers in their development cycle, they come to us with these requirements, and it is thanks to these customer inputs that we are now engaging with customers on these futuristic technologies, and this is what will lead to a very exponential growth in the proportion of new age technologies that we have vis-a-vis the legacy products that we have produced in the past. So long answer, but I think it's important to know that at SJS we build capability for these futuristic products, and thanks to our customer relationships, we are already in a very advanced dialogue with them on their localization plans in India for these products.
Sir, so can you just quantify what percentage of sales is through new age products, like for FY22 to 16%? So what is the percentage of sales from new age products in H1 or Q2?
I can, let me give you an idea in terms of the content increase that would happen. So today, a customer, for example, would import a cover glass for a center stand display at close to about $60 per car. Now, this is the content that we are talking about in SJS. And if I talk of that volume, so imagine that a 3,000 rupee part or a 2,500 rupee part in a four-wheeler is something that we will be over and above what we do. And you can yourself understand all the new generation vehicles that are coming with displays. The number of displays are increasing, and the coating on these parts, they require printing. So SJS, because of its strong capability in precision printing, is already very advanced in this technology, and we hope to see that this should be about 30% or to 40% of our sales in the coming years. Now, how soon it will depend on the pace of introduction by the OEM of this technology in India. But what I would like you to take note is that we are ready for the future. We understand what these technologies are needed, and we are building capability around them.
So again, what you're saying is that, let's say cover glass technology $60. So that is something that is, what would be kind of the kit value right now, and what would be the kit value going forward, if you give some sense on that?
So for a car, depending again, as I have answered in previous calls, so we have a wide variety of products. So chrome plating parts in a car are anywhere from 2,000 to 3,000 rupees a car. The dials that we produce currently are about 300 to 400 rupees a car. So if you put everything together, we would be close to around maybe at an average of about 2,000 or maybe 1,500 rupees per car currently. And you are talking of doubling this by adding this new technology, futuristic technologies in.
Okay.
So these are, for example, if you've seen the XUV 700, the customer imports that large screen that comes in, and now a lot of customers are implementing the same technology across the board. And when that happens, there are very few companies in India that have the capability to do that. And thanks to our relationship with the cockpit display manufacturers, we are one of the first ports of call that they have. So therefore, we are extremely bullish that moving forward, this would be a significant component. In value terms, you've seen that it would double the contribution, and this would possibly be a standard fitment across all the mid-segment and the top segment cars in India, and slowly percolate down to the entry-level vehicles as well.
Are there any new launches as well where you've supplied your products? Any models that you can talk about?
As I said, these are, so we are supporting customers with all their new launches. We supply dials to a lot of these new customers. So the dial localization or the display localization that I talk of is a function of when volumes pick up, OEMs are under pressure to localize. And when that happens, that is where the inflection point and this growth happens very rapidly. So we are already supplying to new models of Mahindra, not the display technologies, but the XUV 700 we supply to the Scorpio N, we supply to Nexon EV, Tiago EV, their Ace vehicle, we supply to XUV 400, the electric vehicle for Mahindra. These are other parts. The displays are not localized because the customers are now looking at finding suppliers like SJS who could be able to supply these parts. But for sure, all cars will have display screens, and these display screens will have these cover glasses that we say. The next step is to have touch panels. So SJS is working very closely on the exclusivistic technologies along with OEMs. So as and when this localization happens, these will form the bulk of the new age technology products that we will supply to the OEMs in India.
Okay. Okay. Thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. Our next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thank you for taking questions. I have a few questions. Firstly, just taking this cover glass product ahead, just had a few questions there. So Sanjay, this cover glass is similar to what optical plastics that we were talking about in our DRHP, right?
Absolutely. So there are two technologies there. One is a PMMA sheet, which is the optical plastic. There are some OEMs which use glass. So the purpose is the same. The coatings are similar. There's anti-reflection, anti-glare, anti-fingerprint, and it requires printing of a black border and some specific icons on that glass or the PMMA. So yes, it is the same part that we talked of at the DRHP.
But Sanjay, I mean, just taking that XUV 700 example, if I look at that screen, I don't think there are any icons or anything, right? It's just a plain display where most of those icons are like digitally created. So in that case, how does our value addition stack up?
There are two parts around that screen. So if you see, there is a black printed border along that screen. Okay, inside you have two TFT screens. These TFT screens have these visible icons that you talked of, but the glass itself has a printed border, and it has some special coatings that are given there for anti-reflection, anti-glare, anti-fingerprint, etc. Now this is supplied by one of our key customers for which we have a relationship for the past 15-20 years. So I will not go into specifics, but all these customers are talking to us of localization in India, and at SJS we are working with them to examine the techno-commercial feasibility, and I think it is just a matter of time before the first one starts, and then everybody will follow suit. So that is really what happens in terms of the adoption of any new technology that comes into the country.
Okay, but in this product, our value addition would be, I mean, we won't be producing the glass per se, right? We'll be sourcing it from someone and then doing the printing and the coating, right?
Absolutely. So even in the optical plastic part that you have, so these are commodity manufacturers which produce in very large quantities and very large scale. So we will not be producing the glass or producing the plastic, but we will be doing a lot of value addition that happens later in terms of coatings, in terms of the machining that goes on. In many cases, there is a bending that happens. So there are very special technologies to make sure that this happens. And then, of course, there are different, I can get into technical cases on this. The point is that there are two types of things which have air bonding and optically clear adhesive bonding. So there are special technologies that are required which control the distance between this glass and the TFT screen. And without loss of transmission, without any distortion. So these are very precise optical requirements, which at SJS we've been working for almost 3 years now. So that should come in handy when we start localizing these for customers.
Okay. Yeah. So basically, I just wanted to understand that complexity. So see, compared to like a 3D dial, this is an equally complex product, right? I was under the perception that it might not be as complex, so the value addition might be lower.
No. So it is very complex, and shipping it from overseas is a big problem because these are all parts which don't require, you need very careful handling. So the market is huge, not just for the automotive industry, but you have multiple defense applications, you have any consumer appliances, you have a lot of applications. So we are very, very excited about this technology. We are thankful to our customers that they are working closely with us. And moving forward, this could be a complete game changer to how SJS or what is the SJS portfolio of products to the customers.
Got it. Secondly, just going back to the exports part, can you just help us understand for within the exports, maybe 1 year back, how was the share of exports within the different key geographies, and how is it now? I mean, you talked about Russia being an important part, so maybe some numbers around that would be helpful.
No, so Russia is a part, but it is not the most important market. Europe for us is the biggest market. And as I said during our investor calls during the IPO, North America is a huge market for us. CRISIL estimated the size of this market to be $2.7 billion. We were hit by COVID, so post-COVID we started doing tech shows at these customers. We've already opened doors to multiple plants or new plants within North America. Now, of course, we have some headwinds in terms of the structure. You have headwinds around the challenges that are there because of interest rate hike and fuel prices hiking. But the story remains intact. So we don't see any change in our guidance over the mid to long term on the importance of these markets, and we'll continue to drive growth here.
Okay. Got it. Looking at the numbers, Sanjay, so if I look at Concall minus standalone, which is effectively Exotech, there the margins this quarter are really strong at, I think, close to 17%. In the past, I think we had talked about this, that in a chrome-plated plastics business, it's difficult to move beyond, say, 15-16% margins. So just wanted to understand, are these margins sustainable, and what are we doing which is leading to this kind of an expansion on margins, especially at Exotech?
So two parts. On a steady state basis, we still maintain our guidance that 15% is the ballpark number to look at. This year or this quarter, we benefited from a softening raw material regime where prices have come down. At the same time, we are doing a lot of hard work because we come from a DNA of a 30% EBITDA, and our natural focus is to enlarge expansion of margin at any of these businesses that we manage. So there's a lot of inward actions taken to improve efficiency, reduce rejections, that aided margins. But to be honest, raw material played a large part in getting this done. But at the same side, so guidance for the future, we still maintain about 16%. I was a little conservative when I said 14 to 15%. I am not optimistic now. I'm just saying that it is within striking distance. So the idea, as I said, is that we inherited a legacy business when we acquired Exotech. Moving forward, we'll open the doors to customers which will possibly be in exports, new areas where we can do high-tech work and have better realization on the chrome-plated part that we do. So that always is the ambition. So last quarter has been very satisfying, and we hope to continue the story forward.
Okay, thank you. And then the next question is on the capex side. So I think H1 we've done maybe just 11-12 crore kind of a capex. What is the capex expectation for H2, given that we have also planned expansion at Exotech?
So Mahendra, could you take that question, please?
Yeah, thanks for your question. For the financial year, we have around 15 crore rupees capex plan. Plus, I'm sure you are aware about it, that we are a expansion for our chrome plating business, where we envisage that we have around 100 crore rupees capex. So around 40 odd crore rupees capex will be happen on account of that in the current year. So you can say roughly for the year is around 55 to 60 crore rupees. 10 crore rupees we have done, so remaining S2 is around 50 crore rupees.
Okay, so it will be back-ended kind of. Right. And just on the standalone entity, I understand that we have a decent amount of capacity already. Just on the standalone revenues, what kind of revenues can we achieve without needing to do material capex at the standalone entity?
We can easily double our FY22 revenue based on the current capacity, and definitely we will do some kind of debottlenecking as well, which will help us to increase that revenue without incurring much significant amount of capex.
Okay, got it. And then just two more questions, more on the product side. So I think, Sanjay, quite interesting, you've talked about entering the specialty decals segment in the FMCG side. Are there any other product segments that we are looking to cater to? And also, my understanding is that auto, typically the testing requirements, all those things are quite stringent compared to FMCG. And that's why there are very almost handful players like SJS who are catering to the auto side. But FMCG, you have multiple players. So how is the product that you're doing different from, say, what others are doing, and also what could be kind of the margin profile for this kind of a product?
So as I've said many times, our DNA is that I don't look at a business which doesn't earn me a minimum EBITDA margin of 30%. So that is the benchmark that we have when we look, or the lens through which we look at any new business opportunity. Does it open large doors to me? So this part was interesting to us. If you see the part, unfortunately you can't see it on an audio call. So it looks very good. And now it has given us ideas that why can't we go to, because there is a premium end of the segment. The theme is the same. A motorcycle manufacturer would like to add some parts from SJS. So if he adds theoretically a 500 rupee part and he can get a mileage for 1,000 rupees, that is good marketing sense for the OEM. So typically the same thing in these high end of the FMCG market. They want to position it at an aspirational level, and that look and feel of the product is enhanced by what technologies that we have. So customers get very impressed when they come to a design center to look at that, what is the possibility, can we borrow something from the automotive to create that effect in a FMCG part, or what more can we do? So there are some technological innovations also that we've done, which create that superior effect. So the customer is willing to pay price. We get as high a margin amongst these premium products that we develop as we do for our conventional products. So we don't trade getting into a business at low margin. That is not what our focus is. So long-lasting products are typically high margin generating. But in the FMCG or the premium FMCG space, customers like to add some bells and whistles to command a much higher price. I gave earlier examples of decorating of fans. A 1,500 rupee fan doesn't use any decoration. But if you add a bit of decoration on that fan, the premium end fan segment is close to about 5,000 rupees. So the customer gains a lot, and it is an additional opportunity to companies like SJS. And we can give styling solutions. We work with the design guys to offer them, give them proposals, what they can implement, and that is what makes us unique.
Got it. And just one last question. I think we have had a good head start in some of these advanced or new age products, be it lens mask assemblies or 3D dials. Now we are looking at the next kind of leg of advanced products. Just wanted to understand where are our competitors now, especially for these lens mask assemblies and 3D dials. Have we seen that competitors have also now kind of introduced these kind of products, or we still have that kind of advantage over competitors?
Yeah, a great advantage. So I don't know of any customer who makes any 3D dials in India in any meaningful manner. And as I said earlier, there are two ends to the coin. One is the capability to do it. The other is to have a sponsor or a customer who is interested in buying from you. So what helps with SJS is a long-lasting customer relationships and the trust we built with them. They continuously award us for quality and delivery and all the other aspects. So we are the supplier of choice as far as they're concerned. So it's very difficult to displace that. So it would take a lot of effort. But at the moment, we continue to enjoy that advantage of the trust that we built with these customers over the years.
Okay. Thank you. Thanks, Sanjay.
Thank you.
Aman?
Yes, thank you. The next question is from the line of Jigar from Edelweiss. Please go ahead.
Yeah. Am I audible? Hello?
Yes, Jigar, you're audible.
Yeah. Thanks for taking my question. Just a couple of things. Could you help me with the capacity utilization at Exotech? How much more existing capacity is there a scope to debottleneck at Exotech more, and what kind of capacity utilization you are operating at?
So, as I said, this is a company that we acquired. So whatever the vision they had at the moment, they focused on that. But over the last 1 year, we debottlenecked capacity. So last year we grew this business by 50%, and we are, of course, identifying new opportunities to reduce cycle time to increase output. We are also looking at, as I said, we've already started work on the expansion plan for SJS. For Exotech, we've identified a land parcel and applied for MIDC for change of name to our to SJS, and we'll commence building that plant, but that will take time. So in the interim, the action that we've taken is, so currently we will deliver a 25% growth on SJS. So last year we grew 50%. This year we grow 25% as we guided. And the new plant will take about 12 months to 18 months to get on stream. In the meantime, we are looking at various opportunities of debottlenecking, shifting capacity. You know, in terms of molding, for example, we can run the mold outside and get plastic parts. We can make the plating process reduce cycle time. So we've already done some work around that to increase the throughput of that plant. And at the same time, we're also looking at that what is it, some low-tech work if we can outsource to free capacity at that plant. So the answer is all of the above. So we are very conscious. We have a strong pipeline. Customers are very interested in our product offerings. So we will continue to debottleneck that plant till that new plant comes on stream. So that's the strategy.
So we are confident that that business can also grow at 25% without the new capacity or till the new capacity comes on.
So it is, to be honest, it is touch and go. So I didn't, or that plant was not built for such robust growth. So 50% we grew last year. This year I'll go 25%. And the outlook for the year after that again is 25%. So it will take some doing. But then we are sweating the asset for all its worth to try and achieve that. In the meantime, we will also see if we can do a new plant implementation in phases, so that can we have some part of the capacity available to augment in case there is any shortfall. So we are looking at all options.
Right. So my next question was, will we see some revenue contribution from the new plant maybe in 2024, because you just mentioned that there is a chance that we might...
Towards the end of 24 financial year. So we don't expect that to come on stream before the third or the fourth quarter of 24. So around that time that will come in. In the interim, we are making contingency plans to, as I said, sweat this asset, look at all options to debottleneck and meet that demand. The customer pool remains very, very strong.
Right. And from a margin perspective, on a consolidated basis now, for the second quarter running, we have done almost 27%, 28% kind of margin. What kind of guidance do you see in terms of margins for the full year FY23? I know this quarter you had some additional benefits of raw material in Exotech, but for the full year, what kind of margin guidance you are looking at?
So we are consistent with what we promised. We have delivered quarter on quarter. So our guidance on margin is between 25 to 27% EBITDA margin on a consolidated basis. We still maintain that guidance, and PAT we expect to grow at close to about 30%. That is what we see for the year and the coming few years.
Yeah, because the first half itself, I think you've done on an average 27.7%, so that's above your range. So are you assuming some compression, or you are just being conservative?
I am happy to deliver more than I promised. So that is what our DNA is. So on a steady state basis, that's what my guidance remains unchanged. So I'm still at 25 to 27%. I know we've done 27.7%. I'd be happier if I do 30% on a consolidated basis. But you can understand we are on the same side of the boat, right? To push it as fast as we can. But a steady state guidance still remains at 25 to 27%.
Right. And just to understand in terms of absolute numbers, your standalone facility can do what kind of revenue, considering the debottlenecking capacity that is available?
So that is what Devanshi just answered. So our current capacity utilization at the plant in Bangalore is about 60%. So we have another 40% to grow, headroom to grow. We have a very large parcel of land in Bangalore, which is already future ready. So we can have about 70,000 square feet area ready for production in about 5 to 6 months time. So we've already future-proofed that current plant. Plus we can set up a duplicate factory for what we currently have in Bangalore. So the current facility is about 215,000 square feet. So technically, we can actually build another facility and double the volume at Bangalore without investing in land.
Right. And just the last question on the two new products that you have launched, the illuminated logos and car glass products. What kind of capex is it likely to entail, and what kind of opportunity size do you see for these two products?
So let me just correct or set the record straight. We've launched illuminated logos, but the optical plastic localization is still in the process of development. So we are in discussion. So we've not started supplying these parts as yet. They are still under development with customers. Customers are very keen to buy from us. They see that we have all the capabilities. So depending on the volume outlook, so we are still firming up plans because most of these customers are at the moment importing this and this localization. So we are in dialogue with the customers to see what concrete forecast do we have, and then we will build our capex plan around the outlook of volumes as it matures. So I would imagine that in the coming quarter or so, we will have a much clearer vision as to what volumes are likely to be, and then we will cut our cloth according to the requirement of the market.
Right, but this will be largely funded through internal accruals, right? So it shouldn't be very big.
Yeah, so we generate a large amount of free cash, as Mahinder said in his presentation. So 57% of our EBITDA is converted to free cash last quarter. So we generate, we have almost 120 crores sitting in as cash in our books. Plus we are generating more cash every month. So we are quite comfortably placed in terms of, and we are a zero debt company. So clearly that is the way forward.
Okay, thank you so much, and best of luck, and keep delivering successful. Thank you so much.
Thank you very much.
Thank you. The questions of the participants are having conscience at the management for the closing remarks.
I would like to thank you all for joining us on this call. And in case if anyone's questions remain unanswered or need to get in touch with us, please feel free to email to me. And anytime if you all are visiting Bangalore, please do get in touch with us in terms of visiting our plant, in terms of visiting our facility, because we've built a state-of-the-art facility out here in Bangalore, which we would like everyone to come and see to understand the products better. Thank you, everyone.
Thank you. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.